Will lower oil prices cause a lot of damage to markets and the global economy? So I was doing some research work for a customer, and I was looking at charts in the oil industry, stock of oil company charts, and charts of companies in other industries, and they're starting to break down and crack. We'll talk about that more later in the show. But we are at an oil price now. The WTI is at $57.51. Brent crude is at $67.59. So the oil market for 12 straight days had just a massive correction. Now, some of it was inventory being increased. Iran is increasing oil production. They're dumping inventory to try to stave off hyperinflation and the U.S. sanctions. The other part is in the U.S., there's massive inventory builds here as well. But also, I think with the oil market, the reason that the paper market went down so much is because of these high-frequency trading algorithms, which push the trend. Okay, it's the new normal now. So if a trend is established, these stupid high-frequency trading algorithms push it even more. Eventually, it exhausts itself, but this is the type of damage that it can cause. So at an oil price now, this is not an oil price that will necessarily bankrupt a lot of oil producers, although I was looking at, like I said, a bunch of different oil producer stocks, and one of the worst ones from damage from this oil price correction was Transocean. And they're the deepwater offshore drilling rig company. They're at, let me look at Yahoo Finance real quick for a quick update. They are at $9.73. That chart has turned extremely bearish. It's on a very downward sloping angle. It looks bad. It looks like a bankruptcy nosedive. So if oil prices continue lower, Transocean looks like they could be in immense trouble. Potentially bankruptcy sometime down the road. I don't know the exact time frame. Looks bad though. But that would jive with the fundamental analysis of the oil market, where, we're at an oil price now where the deep water offshore oil is no longer going to be economic, and the large oil companies, the independents and the large multinational independents, the large super majors and then the mid-tier independents, they will probably be cutting back on their deep water exploration now until they get more signs that the oil price is going back up. So that, the other deep water company, Diamond Offshore, DO, their chart is nowhere near as bad as Transocean. Transocean looks bad though. I think there's a lot more downside there, especially if oil goes lower. Okay, so before we do any more oil market analysis, talk about other current events, some of the other crazy things going on in markets and the economy, let's get the stupid disclaimer out of the way. I'm not a financial advisor. Anything I say on here is for informational and educational purposes only. Not a financial advisor. Again, I do not want suits with badges, 2 suits with badges coming to visit me again. Okay, I also want to thank my Patreon account contributors, all I think 68 or 69 of you. Appreciate it. Wish I had more. But in the new normal now, people just don't want to pay for content, and then they send me nasty messages. Okay, so let's get back at, and I don't have any control over whether or not you're going to give me any content. I just have control over whether or not I want to do any more free content in the next couple months. So we're going to go to some more market analysis. Okay, so normally the textbooks would say for the oil market that lower oil prices would actually be good for the economy. And to a certain extent, they might be. However, when the oil market crashed a couple years ago and had a bear market for a couple years, it really only allowed a couple $100 extra, I think the study showed, in consumer discretionary income. And what the consumers did instead was a lot of people in the United States actually switched to pickup trucks and SUVs. Are lower oil prices good for emerging markets? Yeah, they're probably pretty good for emerging markets, but some of the cheapest gas prices in the world are still in the United States. Unless you're in an oil-producing country like Venezuela or others that drastically subsidizes it and doesn't have market prices. Okay, so the economic textbooks say that when the price of a commodity goes low enough, it will curb the supply. But actually, counterintuitively, from being involved in markets now for 10 years, that actually does not happen right away. So what happens right away, counterintuitively, is the producers of said commodity, whether it's oil or gold or silver, they actually try to produce more. They maintain the production levels, or actually they try to increase them sometimes. And it's out of desperation. So if they have too much debt, they don't want to, if they have debt to pay off, or they're a national oil company where the government relies on massive amounts of tax revenue, they don't want to drastically reduce their cash flow, because they're worried then that if they cut back on social programs or their budget deficits will blow out. So they're willing to run the oil production and make it up on volume at a loss. Now, obviously, in the long term, you can't do that. Okay, it's a losing strategy. But in the short term, for a quarter or two, maybe 6 months, maybe even a year, producers will try to do this. You're seeing it somewhat in silver now for some of the silver miners that are running at a loss. A lot of the oil producers were running at a loss a few years ago when the oil price was lower prior to oil's rally, big rally, from summer of 2017 up until October, really. I'll answer listener questions later in the show. I have a lot of topics I want to cover. So a lot of the oil charts are starting to break down. Some of them look a lot worse than others. And the consumer savings from oil, the studies have shown that it's really in the United States for a family of four, like a working class family or a middle class family, it's really only about $500 a year. For oil prices dropping like $20 a barrel or $30 a barrel, it's not a massive savings. The larger amount of consumer discretionary increases were from the Trump tax cuts than from the oil price dropping. So oil will not cause, a lower oil price will not help the consumer massively. It may allow them to buy some extra Christmas presents or go out to dinner maybe a couple more times a month or something like that. But it's not an amazing amount of savings. Plus, the data in the U.S. economic data, the government data, has shown that based on the Trump tax cuts, a lot of people who benefited from those, what they did was they went and took on a lot more credit card debt, and they went out to eat a lot more, and they also went to retail and bought clothes. So people were already, because of the Trump tax cuts, they were already taking on more credit card debt and going out to eat and spending money on clothes. So I don't think that the consumer is going to get a big boost from the lower oil prices. And in fact, if the oil prices continue lower, that could mean people lose some of their jobs. Especially for the more indebted and higher cost shale producers that are not properly hedged. Okay, so I'm sure I see a lot of oil and natural gas questions. Some good evening, so we'll do that later in the show. But from doing research work and looking at a lot of different stock charts in a lot of companies and a lot of different industries over this entire week, one thing I was seeing was that a lot of stock charts are really starting to crack. Okay, so there's the industries, the companies in certain industries are still doing well. Surprisingly, are defense and the military industrial complex. Those charts are still doing good. So your Boeings, your Northrop Grummons, your Lockheed Martins, those stock charts are doing good, especially compared to many other industries. And restaurants and retail, especially those casual sit down middle class restaurants, are actually surprisingly have been doing well the last year or so. And they're not in a major downtrend yet. And same thing with a lot of retail companies. So there's some big retail high flyers. But we are starting to see a lot of cracks or crashes in a lot of stocks, especially some of these, like Nvidia this week had a real bad earnings. And a lot of that stuff was tied to crypto because they sold a lot of GPU processors for people to mine Ethereum. So they lost a lot of sales from that. They missed on revenues. Nvidia missed badly on revenues and on earnings. And that stock in a single day, it crashed, I think, around 18%. And it's in a big downtrend. There could be a lot more downside to Nvidia. Fred Hickey, one of the best technology experts in the world, he thinks Nvidia could drop more than 50% from here. So we're seeing a lot of stocks and a lot of industries. I'm not saying that they're immediately going to all crash, 40 or 50% overnight or even in the next couple weeks, but they are starting to crack. You're seeing 10, 20% drops in some of these stocks where they're either entering bear market territory or they're about to enter bear market territory, and there could be a lot of chop with volatility. And once the charts switch from bullish to bearish, then it's an uphill struggle for some of these charts. Basically, they have to print really good revenues and earnings. They have to improve a lot fundamentally to convince people. Or the central banks have to reverse. Which I don't... There has been some stuff going around with Neil Kashkari. I can't remember if he's at the Fed or not still. He has political motives, former Goldman Sachs. He did an op-ed in the last week or two saying that the Federal Reserve needs to stop interest rate hikes, that it's going to crash everything. So it looks like the Fed may be cognizant of that and is debating whether or not they should do more rate hikes. But yeah, a lot of the FANG stocks are cracking. There's a lot of red flags. Apple not reporting their unit sales now. Yes, so Apple can still grow revenues, but they're going to really struggle, and there's a red flag to me for them not reporting their unit sales for their iPhones. That means that they're gonna have some really bad numbers. But they can still grow revenue by continuing to raise prices on all their other items that they sell. They're just not growing. So that means the smartphone market is saturated, Apple's losing market share, and Apple is struggling to sell in China. There's just so many, from what I've heard anecdotally, there's a lot of knockoffs of iPhones in China that are pretty darn high quality at a much lower price, and those are a lot more popular in China. The Chinese stealing of intellectual property is so good that the Samsung and LG are about to release a foldable smartphone at the 2019 Consumer Electronics Show in Las Vegas, and a Chinese company stole the intellectual property and released a version already for sale. So Samsung and LG, South Korean, technology giants, they were going to release in the next 6 months this foldable smartphone that was going to debut at the Consumer Electronics Show, and a Chinese technology company already knocked off a version of it. They probably stole the tech and the IP, and they already have a version out for sale. Pretty crazy, huh? That's how good the Chinese are. Facebook has destroyed their brand. A lot of my friends are deleting their Facebook accounts. So Facebook has a credibility issue. Their business is actually still pretty profitable. They make a lot of money off advertising. They have strong revenues, but they're destroying their credibility with a lot of people. A lot of millennials don't even use Facebook anymore. They're younger than millennials now. Whatever Generation Z, I think it's called. They use Snapchat and some of the others and Instagram. But Facebook owns Instagram. Okay, I'm checking my notes real quick. Yeah, so I was looking at the oil price charts, the short-term oil price charts, and it tried to rally this past week, and it was smashed back down. So in the short term, the oil price will probably, this is my educated guess, not financial advice, will either go sideways or lower in the short term, which will cause more pain for specific oil stocks. So we really need a fundamental catalyst for the oil price to go back higher. There needs to be a big production cut or more demand growth, or there needs to be the inventory cleared out, something along those lines. But as long as Iran's going to keep dumping inventory and increasing production, things are dire in Iran, depending upon which source of information you're getting things from, because of U.S. sanctions from SWIFT and the other stuff. In Iran, according to Professor Steve Henke, has had a 268% annual inflation rate recently. Okay, so I talked about the FANGs. The FANG stocks are cracking. Now retail money, on CNBC and Bloomberg, the talking heads will tell retail money that now's the dip. Now's the time to go in and buy Facebook and Apple, Netflix, Google. They'll tell the retail money to do that. Now's the time to buy those on discount. But the institutional money, I don't think is buying the dip. Like I said, I have not seen any data that has changed my mind that the institutional money is fading these rallies. So I believe the institutional money is still fading rallies. Okay, so let's transition now to Silicon Valley hypocrisy. I have quite a few things here in my notes. So in general now, the U.S. has a very pro-tech bias. Technology companies get higher valuations than regular profitable businesses. Louis Camersano and others can talk about this because Louis ran a company that was an actual business far more profitable than Zillow, and Zillow got, I think, 10 times the valuation he did, even though they were losing more money. Go figure, right? So there's just tons of hypocrites in Silicon Valley. I'm not saying everyone in Silicon Valley is like that, but most of them are. And so there's been articles coming out over the last couple months, And you could look there, even the mainstream financial media and mainstream media is covering this now. This is crazy. And I think the Jamal Khashoggi incident caused these articles to come out, that basically Silicon Valley has taken tens of billions of dollars in Saudi money. So SoftBank, the Saudis gave SoftBank like venture capital and angel investor funds tens of billions of dollars. I think initially it was like 45 billion just in the last couple of years, and now it's another 45 billion. So it's going to be at least $90 billion to allocate. And so all these startups are taking like Saudi money that's going into Silicon Valley. And there was even one of the insider guys, I think, at SoftBank in charge of allocating this capital. He even in the last couple weeks, he admitted in a mainstream technology article that most of these Silicon Valley startups are actually sophisticated Ponzi schemes. So they may have some type of business plan, but they have no plan on how to get profitable. They just know how to grow revenue and some type of tech idea. And, you know, this is the problem with society, is that they're going to do creative accounting. They're going to sell people on an idea. They don't actually have a way to saying that we're going to be profitable in 3 years. We're going to have these types of margins. They don't have any of those normal business plans. And they've been getting away with it. XLF financials cracking. Yes, the financials are cracking. I was actually going to talk about Warren Buffett and how he may have preemptively, either he's saying it's value investing to come in with JP Morgan, buying 35.6 million shares at JP Morgan and also PNC Financial. But rather than it being a normal value investing play, it could be, given Warren Buffett's history of corruption and cronyism lately, and also Warren Buffett's history of bailing out financial firms over the last 3 decades or so, because most people aren't aware that Buffett was also involved, I think, in bailing out Salomon Brothers. He almost did the Lehman Brothers deal. He did bail out Goldman Sachs. He did bail out GE, mostly because of GE Financial. So there's a history of Warren Buffett, at least for the last, it's increased a lot in the last 10 years or so, but Buffett has a long history of coming in and trying to, Buffett almost put a big stake into was it Barclays? No, it wasn't Barclays. It was Lehman Brothers. If Barclays did some of the financing, Buffett was, I think, going to put in a tranche of it. But I'll talk about that later in the show. I have that in my notes. You're jumping the gun, buddy. You're jumping the gun. Okay, and so on top of this, more Silicon Valley stuff. So over 80% of the initial public offerings or IPOs in the last 12 months are from very unprofitable companies. This to me is a red flag. This is what the angel investors, the venture capitalists, the insiders at the company are doing to dump their shares from companies they know are not good before the stock market crashes. And so you have to, if you're trying to trade one of these IPOs that just had an IPO and you're trying to ride it up really quick and make a quick buck, you got to look in the disclosures and find out when the lockup period is, when the management team is allowed to dump their shares, because sometimes it's like 6 months or a year, and they could dump by like the 12 month mark on a major exchange. They could dump all their shares sometimes. Yeah, so Silicon Valley, enormous hypocrites. There's some fake libertarians there. I saw that Mark Zuckerberg was he had wanted to fire the Oculus Rift guy for a while because he publicly came out as a Trump supporter, and Mark Zuckerberg was trying to get him to switch over to support for Gary Johnson to be a fake libertarian. I just thought that was funny when I saw that story. Okay, crossing off that on my notes. We're going to go now to GE, so General Electric. So it's looking very, very bad for General Electric. The stock chart is dire. We could have General Electric bankrupt in the next couple years. It could even be sooner than that. I've been reading up on some articles on General Electric. So basically, the company has been doing financial engineering for over 2 decades. They had so much assets, so much capital, so much cash flow that they could easily get away with it for a long time. When I interviewed Francine McKenna, she said that they were warned many times and had to pay fines from the SEC for accounting gimmickry or outright fraud. But people didn't see it because they didn't read through the annual report. They didn't read in the fine print, and they didn't, because it's not like General Electric was going to issue a press release telling everyone, hey, we were fined by the SEC, and we just paid a large fine, and it's not that big a deal. Because, they just buried it basically in their annual reports and their quarterly reports. So they said they disclosed it. Most people just didn't read it. But basically, though, General Electric, the problem that General Electric has run into is with debt. And so General Electric had, in the past, they were one of the richest companies in all the United States. I think their market cap was well over $400 billion for a very long time. They had enormous cash flow. And so they were taking advantage of that cash flow by leveraging to the hilt with debt. And they didn't do a bunch of necessarily acquisitions with a lot of that debt. They did a lot of financial engineering with share buybacks. So they were doing that because they couldn't really grow the other way. And there's a lot of other companies that are going to end up being like General Electric. It's just General Electric has been doing it for longer than other companies. So over the next 5 to 10 years, especially as interest rates rise, if they do rise, if central banks don't manipulate them back down, there's going to be a lot more companies like General Electric over the next 5 to 10 years. ExxonMobil's been doing it as long or longer than General Electric has. The difference is that ExxonMobil had a lot more cash flow from oil and natural gas, so that's how they've been able to get away with it. But if they don't smartly grow revenues and do a smart acquisitions for replacing oil and gas reserves and growing revenues, they're going to pay a price too eventually at some point. I don't want to give it an exact time frame, but ExxonMobil will run into trouble at some point too. But basically General Electric, so their credit rating was downgraded. So now they don't have access to the lower interest rate commercial paper market. And now General Electric basically is reliant on their investment bankers to decide whether or not to pull the plug. So their revolving credit facilities, they're tapping those, which are very, very risky because basically their cash flow has started to fall, which means that their debt to cash flow ratio is bad. And also with their share price falling down too, because their credit default swaps are blowing out and they have a lot of problems at the company, their equity, their share price is down. Which means that the bankers who are deciding whether or not to pull the plug on GE, deciding whether or not to keep the revolving credit facility at the same levels or increase them, give GE a lifeline and allow them to try to pull themselves out of this mess, they're saying, hey, look, your debt to cash flow ratio is out of whack because your cash flow is down, your debt's still high, it's over $100 million. The CEO of GE said he's gonna try to sell assets at fire sale prices. We don't know if they're gonna be able to get good money for selling their assets, especially in a fire sale. People might just wait them out until bankruptcy or try to get them for pennies. And then also you have your debt to equity ratio, and their share price is down a lot, which is out of whack. And so I've been reading articles that, once these GE problems occurred, that there's a lot worse than this. There was actually a Bloomberg article. It's in the Wall Street for Main Street Facebook group that I found. It's from mid-October. It's about a month old. But there's a lot of examples of companies, large publicly traded companies, older companies. Campbell Soup was one. There's others in other industries. You can go in there and read the article. And there's like dozens of large cap, companies that were looked at in the past as blue chips, like Michael Milken was talking about. And basically these companies took way too much advantage of their credit rating and just loaded up with debt to try to save their share price so the management team could get rich. Meanwhile, years later now the company's going to be in trouble. This is the new normal now. So it's not going to happen right away, but there will be more companies in as bad a shape as GE. It's a question of if and when. GE is going to have to be restructured, most likely. Might even be in less than 2 years. The stock chart is looking really, really bad on GE. But basically, GE is in the hands of the bankers. If the bankers decide on their revolving credit facility that they want to pull the plug on GE, then they will. So GE will be bankrupt. But a few of my libertarian friends of mine were talking about how GE might get a bailout. So I think the public backlash, especially from whether you're Republican or pro-Trump or a libertarian or even like Bernie Sanders extreme, the public support, normally politicians look at public support levels for things like bailouts. And in the United States now, the public support for any bailouts is probably unpalpable. Like, I don't think you're going to see a lot of normal large corporations get bailouts, because then wouldn't have Kodak gotten a bailout? Kodak was a beloved American company for over 100 years. A lot of people love Kodak. They had a really good brand. Unlike GE, they didn't destroy their brand completely. GE basically left a lot of the consumer businesses, because there used to be like light bulbs and telephones of GE in everyone's houses besides just the appliances, and GE moved away from that. So there's going to be a lot more GEs. It's a question of when and not if, in my opinion. So we'll see which ones. But Campbell Soup is actually, from reading some of the stuff over the next couple of years, Campbell Soup could be one of them. I saw some really bad stuff about Campbell Soup's debt problems and financial engineering and falling revenues. And Campbell Soup is, a very famous American company. But, I mean, how many people love to eat soup like that all the time? So, consumer preferences change. And financial engineering, in the short term, it works. In the long term, it makes things a lot worse. McDonald's is not going to go bankrupt right away. But if they stick to doing this financial engineering, McDonald's increased the debt on their balance sheet in only a couple of years by 100%. Their earnings have increased, but their revenues are falling. My friend Michael Leibowitz wrote an article about this. So Jim Chanos is short McDonald's, I believe, or at least he was last year. So long term, a lot of these companies, in the short term, this financial engineering moves the stock higher. Long term, or keeps the stock from falling too much. In the long term, there's going to be hell to pay because of the craziness that the CEOs and CFOs did with their balance sheets. Okay, so I just want to give some additional comments on my Francine McKenna interview. I know you guys liked it a lot. I think there was only there was 0 or 1 thumbs down the last time I checked. So I think you guys really liked that interview. But, I think she was being too kind on the SEC. From what I've heard in the stories, David Einhorn wrote basically an entire book. It was a collection of his newsletters with additional insight in there, outlining all the ways in which a specific one or two specific publicly traded companies were committing egregious accounting fraud, and I don't think the SEC looked into it really at all. So what Francine was saying was that a lot of these that the SEC has limited resources and can only set an example once in a while for certain companies. I think that's being too kind on them. Let's just put it that way. Oh, so another stock chart that's interesting, that's starting to crack, and this one's actually very surprising, is Best Buy. So normally, if you're familiar with Best Buy's business, normally in Q4 of each year, Best Buy is a very seasonal company. Their revenues are really lumpy, and they make over 50% of their revenues in basically 3 or 4 months out of the year, prior to Christmas, Hanukkah, the other holidays. And so the Best Buy chart, if you take a look at it, it's already starting to break down, which is kind of surprising. So I don't know, maybe there'll be retail sales numbers that will come out and reverse this trend. But normally, if you're trading Best Buy as a stock trader, it's not normally a good time to short Best Buy now. Normally, Best Buy in the past, the best time to do it is after they announce their Q4 numbers, because then their earnings and revenues are going to be bad for pretty much the rest of the year. 3/4 of the rest of the year. So you don't want to be short Best Buy going into the Christmas season and when they announce their earnings, in March for Q4. But things look different on the Best Buy chart now. So maybe things will reverse, but it's kind of a warning sign for Best Buy. Something to watch for. I would watch Best Buy as an indicator for how the consumer is doing. Besides Amazon, Best Buy is another one, because so much of Best Buy sales occur in just the Q4 of the year. So I would watch that stock as an indicator for consumer behavior. Okay, we're going to transition now to... so defense. I said this earlier in the interview, but basically, out of the different stock charts I was looking at of larger and mid-cap companies in different industries, the companies that are still in clear uptrends, bullish trends on their stock charts, were mostly defense and military industrial complex companies, restaurant companies, so the casual mid-tier, the casual sit-down restaurants for middle class, and then retailer stocks. So those are not cracking yet, still in uptrends. Some of them have had a little bit of a correction, and they bounce pretty strongly off of a support level and go right back on up. And the stock analysts for some of these retailers and restaurants, there's a lot of bullish consensus for the stock analysts covering these companies that have higher revenue targets, higher earnings targets, higher stock price targets. So those, I think, as a contrarian, that would interest me, that these guys are way, way too bullish that the Trump tax cuts are still going to be good for, consumer discretionary, for restaurants and retail. Because eventually these things will wear off, especially with Democrats about to take control of the House of Representatives. I'm not really sure how many more tax cuts Trump's going to be able to get across. Maybe he'll be able to work out some type of deal with the Democrats, maybe for allowing like some type of DACA deal, but they didn't seem interested in that last time, and I think Trump actually gave them a pretty reasonable offer on the DACA deal. They didn't seem interested at all in that. Kirsten, well, Best Buy actually crashed a lot. This was in 2013. This was right before I got fired from Investing Daily. One of my bosses, I told him not to do it. He wrote a bullish article in the summer about Best Buy, and it dropped 40% within a couple days after he wrote a bullish article for Best Buy. I was laughing at him. At another company, the person would have gotten fired for writing that article, but since he was the boss and he screws up all the time and drinks on the job, then no one fired him. But Best Buy has a real problem. Best Buy, for some of their revenue now, they're actually matching Amazon on prices. And that's not a sustainable business model because Best Buy has a retail business. They have enormous stores. They have tried to somewhat downsize them. They keep less inventory, but they do have to pay their workers. Amazon doesn't have nearly as many workers. And Best Buy has to pay, rent and leases or owns the building. There's a lot more costs associated with running a business like Best Buy. So in the long term, they can't match Amazon on every single price and make a profit. Not that Amazon makes a profit. Amazon, I was actually bringing this up to my friend. The way Amazon is structured and how little profits and free cash flow Amazon makes, it's actually structured very similarly to one of those oil trusts from like 100 years ago, like Rockefeller and some of those other trust guys, to where the company is like a revenue-only generation, and on paper, its revenues just almost match its expenses. Amazon's set up almost exactly similar to that. It's more sophisticated, but it's set up very similarly to some of those trusts from 100 years ago to gain market share and just wipe out competition. But, they offer people low prices, so a lot of people like it. I think people will wake up, though, if Amazon continues to destroy jobs. Okay, so let's talk about gold and silver really quick. We are at 1221 gold and 1437 silver. Gold's actually holding up pretty good, considering that the dollar index is almost back at 97 again at 96.48. So gold's actually holding up pretty good. I think this means that some money has come out of stocks and maybe some other asset markets and gone into gold. The gold miners, some of the royalty and streaming companies are holding up pretty good, but a lot of the regular gold miners are not doing well at all. And we are starting to finally see some more consolidation in the gold and silver mining industry. So I talked about Barrick Gold and Randgold Resources merging. This week, Pan American Silver bought Tahoe Resources. So Tahoe had a real problem in Guatemala, and that was causing a lot of problems there. Their management team really screwed up the community relations with the Guatemalan government and the Guatemalan people there. They did not reinvest in the community for infrastructure, electricity, schools. They didn't make those investments that the modern mining company makes nowadays. Pan American Silver, if they can optimize the Escobal mine in Guatemala, which is a really high grade, really low cost, really long life silver mine, that will be a home run for Pan American Silver. Pan American Silver has the assets in the balance sheet to kind of weather the storm. So if they can execute on getting that mine up and running right and fix the community relations with the Guatemalan government and the Guatemalan people, I think that could be a real home run for Pan American Silver. Pan American Silver now has, in addition to that, they have also the Navidad mine in Argentina, which it was supposed to be online already years ago, but that mine is really high grade and pretty low cost too. And so probably in the next 5 years, that mine will be online as well. So Pan American Silver has some really high quality long-term silver assets. Not financial advice, but I think at this stage of the game, Pan American Silver is a lot safer, way, way safer now, and has much more upside than First Majestic Silver. First Majestic Silver is blowing through their cash. They're trying to cut their production costs. Their balance sheet just went from $100 million in cash down to $70 million because they're trying to make the investments to cut their production costs. Their production costs were around $16 an ounce still. They're trying to cut them. So if they can't execute, First Majestic Silver is going to have to dilute the stock even more. We'll see what happens in the near future, but I think Pan American Silver, this is not financial advice, just my opinion. I think Pan American Silver is a lot safer and has a lot more long-term growth in their pipeline with higher grade silver and lower costs than First Majestic Silver. There's also some rumors going around that Pan American Silver may be interested in trying to buy Mag Silver so they get that 44% interest in the Juanicipio mine. I've heard rumors from a couple friends about that. I'm not sure if they're true, but we'll see. That would be, if Pan American Silver does that acquisition, they will own almost all the best future silver mines that are high grade, low cost, super high grade, low cost, and long life. So Pan American Silver will have ownership of 3 out of basically the 5 best new silver mines in the world. Have exposure to it. Okay, Kazatomprom, which is the uranium miner, they're going to IPO in London because they saw how Cameco stock almost doubled from the lows, and Kazatomprom wants to raise capital to fix their uranium operations. So we'd have to look at their financial statements and see stuff, but that's interesting that Kazatomprom is considering IPO now. They have some quality uranium assets, at least we think so, but we'd have to look at the data once it goes public. Because right now I think they're a mostly government-run operation. Warren Buffett has been... So initially Warren Buffett said there were no good deals on stocks, and Warren Buffett bought back Berkshire Hathaway stock with free cash flow. He bought back about $1 billion worth of shares. But lately it's been coming out in his releases that he's been buying a lot of JP Morgan shares and also PNC Financial. So 35.6 million shares purchased at JP Morgan and around 2 million shares, I think, of PNC Financial. This is interesting from Buffett. So I like his investing methodology, with cash flow and value investing and durable competitive advantage, economic moats, that type of stuff, consumer monopolies. But, for the last 10 years, Buffett's political stuff and his cronyism and corruption has been pretty much just insane. Plus, a lot of the companies he invests in eventually have an accounting scandal. Not everyone, but a lot of them. So it'll be interesting to see. He could have purchased JP Morgan as like a vote of confidence ahead of time. So rather than waiting until the financial system is in trouble again, he could have started making purchases now to try to maybe delay that or reduce. Maybe someone asked him to. Who knows? We'll see what comes out in the disclosures, but didn't Buffett get like a bunch of preferred shares? He got some really sweetheart deals with Goldman Sachs and GE, General Electric, when he made those purchases. So I don't know if he got those sweetheart deals with JP Morgan, but we'll find out eventually if he did. The cryptocurrency prices continue to go down. Bitcoin is below the support levels. It did not hold around 6,000. It's below. I'm hearing anecdotally from friends who worked at Bitcoin miners in North America that they're losing their jobs. So you are starting to see like some of these large-scale Bitcoin miners that were trying to be commercial-scale Bitcoin miners on a publicly traded exchange. You are starting to see them fire people and or consider shutting down. Nicholas Allen, it's really funny about Buffett because he's criticized, if you read through a lot of the Buffett books and value investing books, he criticizes Wall Street heavily. But then he ends up wanting to buy bank stocks after they crash. So it's kind of catch-22 or hypocritical. His investing strategy, though, is to buy value when there's blood on the streets. So I think in a lot of cases when he does buy a bank stock, he's expecting a bailout. Because he helped save, I think, Salomon Brothers from their initial bankruptcy about 30 years ago. And he has a long history now over the last couple decades of trying to step in and help out banks. But he gets like crazy deals that retail investors don't get. He gets really sweetheart deals. He got preferred shares in Goldman Sachs and General Electric that I think the retail investor would not get. He was guaranteed a really high return to put in his capital. Buffett likes insurance companies than banks. He prefers insurance companies more because remember he screwed up Berkshire Hathaway. It was a textile company and it lost a lot of money, and then he started buying insurance companies out of the holding company. I don't want to go into too much Buffett, but I do like value investing. I just don't really trust Warren Buffett anymore at this stage due to his politics and his corruption and cronyism. Jordan Belfort, funny name. Are we in a game that's rigged against us? Yes. Yes, but if you just hold cash or you just buy one thing, like if you only buy Bitcoin or you only buy gold or you only buy silver, you could get in trouble. They could change the rules on you. So we are in a game that's rigged against us. The mainstream media is pathological liars. They're trying to pump up the stock market. We are in a rigged game, but not so easy to get out of it. The best way to get out of it is to build a business for yourself. Preferably online, but in person too. Although in this day and age, if you build a business, a bricks and mortar business, and it's in the wrong city and state, and the politicians come in or the bureaucrats come in, they can destroy your business pretty quickly. Inflation and taxes, rules, regulations, they could destroy your business pretty quickly. RJN44, looks like probably marijuana again is going to have a rally. Once Trump gets in a new attorney general besides Sessions, there's been rumors that at the federal level, the new attorney general will not, there may even be national federal legislation passed for like maybe state countrywide legalization of marijuana, or at least decriminalization. Maybe decriminalization first and a path towards full legalization. But at the state level, the pot stocks are going to be very volatile. I could see those things going up a lot and crashing, going up a lot and crashing. They're like biotech stocks. So every time there's a positive press release, there's not the real earnings growth, good margins. If you look at the financial statements of a lot of the pot stocks, I talked about Tilray. Tilray grew revenue, but the losses were growing. So in order for Tilray's management has a really bad history of running that business, and the disclosures in their financials and their annual report and quarterly reports are bad. And in spite of that, the market, because pot's the hot flavor, when they announce an earnings release and they say, oh, we grew revenue, the market just ignores how the losses were even larger with the increased revenue growth. Now, this volatility can be traded. You should not buy and hold pot stocks, okay? You should not be long only pot stocks. Okay, this is not financial advice, just my opinion. But you cannot buy and hold pot stocks and just be long pot stocks and buy and hold and hope to make a lot of money. The best way is with all this volatility, probably trade them. So maybe after they crash, you buy some, a new press release from a government is issued, the pot stocks go up, you sell them or short them, and then the cycle will repeat. I could see this going on for years in marijuana. Big Pharma, 66 Sigma, Big Pharma has way too much control. The FDA is criminal and corrupt and doesn't do a good job. Big Pharma has way too much control over everything. That's why we don't even have a lot of generics in the United States. Didn't you just see, I don't want to be too conspiratorial here, but there was like, I saw it on my Twitter feed in the last 48 hours that there was like a pretty high up Health and Human Services employee, and it said he was like stabbed or something or shot, and they ruled it a suicide anyway. And he was like trying to get all these extra generic drugs passed. Nicholas Allen, correct. It is a manufactured bubble. It is a manufactured bubble. That doesn't mean you can't trade the volatility. And I never said to be long pot stocks. I said to not buy and hold pot stocks. We live in a very weird and corrupt world. Reality is distorted very, very badly. Reality is so distorted that Jim Acosta, with his stupid little incident, the mainstream media is applauding him for being such a champion of the First Amendment. Meanwhile, they hate Julian Assange. Julian Assange is one of the most legit journalists we've had in decades, a real legit investigative journalist. He's reported dirt on both political parties in the United States, the Democrats and the Republicans. And initially, the Democrats loved him because he was going after George W. Bush and the neocons and the Bush administration for the Iraq War and Afghanistan, that type of stuff. And now the Democrats, the mainstream media Democrats, have turned on him. So it's really messed up how, like, the Democrats and the mainstream media are applauding Jim Acosta, I think Jim Acosta is a drunk and a political hack. And, they won't have anything nice to say about Assange anymore. And it's really sad how basically without Assange releasing the Hillary Clinton emails, the Podesta emails, not the Hillary Clinton emails, the Podesta emails, the WikiLeaks Podesta emails, prior to the 2016 election, there's no way Trump would have won. That a lot of voters in the exit polls said that played a big part in their vote due to how corrupt Hillary Clinton and her cronies were. And so basically, Trump can't even, because all the neocons are giving him advice, like the Pompeos and the John Boltons and all those other guys are running his foreign policy, that in spite of Julian Assange basically helping Trump win the election, now, like, they're still going after Assange. It's really sad. Correct, Nicholas. Acosta is an actor. Assange is a hero. I agree with that. Yep, welcome to dystopia. The sad, sad truth. And Assange has 2 kids. I don't think he's going to get to see his kids again. It's just such a sad situation. Okay, so a couple more things. So, came out this week. Want to see the end game for quantitative easing? Look at Japan. Okay, so this week, for the first time in history for any country, I think, Japan, the Japanese central bank, the Bank of Japan, their central bank balance sheet is now over more than their entire economy, is over 100%. So the Bank of Japan's balance sheet is now over 100% of the entire Japanese economy. That's probably the way things are going for the Federal Reserve, for probably the European Central Bank. It's probably going to be that way for the People's Bank of China too, because China is basically intentionally hyperinflating their currency and creating an enormous credit bubble. So if you want to see the future, look at Japan. Is Japan printing more money than Zimbabwe? On a total basis, yes, but Japan exports it. So they allow, like, the hedge funds and institutional investors and investment banks to borrow yen, and that takes a lot of the inflation out of the country on the yen carry trade. And that brings inflation into a lot of other asset markets and creates a lot of other asset bubbles. Offhand, I don't know small cap stocks that pay dividends. Sorry, Jordan. I would have to do additional research on that. Sorry, I don't know any offhand. There are some, but a lot of stock market valuations are not good right now. Okay, so I think I covered pretty much all the topics that I wanted to talk about, and I'll take a look at the listener questions now and comments. I did do some research work on natural gas. There is some opportunities there. Woodside Petroleum looks pretty good. That's an Australian company. The problem is if you're an American or Canadian, it's over the counter. But that's a really big business, and they have a big LNG business. So that one looks interesting. There's, again, not financial advice. There's a lot of others, but that one looks pretty interesting. There's a good amount of articles on Seeking Alpha talking about natural gas and where to look for, so I would look there. You can search natural gas on Seeking Alpha. Lower oil prices is good for emerging markets. Not for every emerging market. Look at Malaysia. Malaysia came out and said earlier in the last week or two that if oil price went below 70, and now it's kind of below 70, that their national oil company would almost be insolvent and their government budget deficits would explode. Malaysia basically has a triple whammy from the dollar rally, from interest rates being hiked, and now a lower oil price. So Malaysia's national oil company, which is a pays a good amount of their government tax revenues, Malaysia is in trouble. So not every emerging market is benefiting from lower oil prices. I would also say that in Brazil, Petrobras, which is a big company there, they're not going to do as well because they are a pretty low-cost producer for their deep water, but in general, deep water is higher-cost oil production. And there's already been a lot of scandals, so Petrobras could be in trouble if oil prices go lower as well. I don't know what they've hedged. So it depends if the country is an oil producer and what the production costs are for them to produce oil, and then also how much social program promises they've made. Because if you have made many billions of dollars in social program promises and you have a low oil price, you can't cut oil production like you should. A lot of these OPEC countries actually maintain or increase oil production when oil price crashes because they're worried that they can't pay their social program budget, and they're worried about civil unrest and potential political revolution. So it depends on which emerging market. Malaysia already publicly announced, so that things are bad if a government is publicly announcing this, because I think some of their government officials talked about the dire effects of their government finances if the oil price went below 70. The Brent crude price did. Cash flow, lower oil price good for miners right now with low price. So if the oil price does stay low and the gold price stays at these levels, the margins for a lot of gold miners would be better. Okay? Now, if the gold price went higher and the oil price stayed low, the margins would be even better. The problem is for silver miners, this is not really that good. Silver miners, a lot of primary silver miners were already in trouble. Coeur d'Alene had really, really bad earnings released in the last couple of weeks. First Majestic Silver is not in huge trouble yet, but if they don't turn things around the next couple months, they will be. They're going to have to do a major capital raise at a time when their share price is already down a lot. So I think the gold miners are, especially the lower cost ones, this drop in oil price, if it stays here or go lower, is going to benefit them. Their margins are going to beat on the upside, so they're going to beat earnings then. They're going to beat analyst estimates on earnings. But the silver miners are still bad. We still have a silver price at $14.37, which is not a good silver price. The gold price on a relative basis is much better for gold miners than the silver price is for silver miners. And we're at a copper price. We were at $2.81. That's not a good copper price. Only the lower cost copper miners are doing pretty decent right now. That's not a good copper price for most copper miners. But if copper miners do go bust or cut production, that would be good for silver supply in the long run. Greg, I don't think oil is trading too much on the dollar right now. I think oil is trading mostly on how supply has been increased by Iran and Saudi Arabia and the U.S. oil inventories. So I don't think the dollar has a lot to do with the oil price right now. I think the market is worried that there's kind of a temporary oil supply glut right now. Meanwhile, in the long term, there's been over $1 trillion in CapEx that has been cut in the oil market on long-term oil investments. So shale has been a temporary solution, but long-term, it's not a permanent solution. And shale is mostly good for U.S., only for the U.S. There's still a lot of major problems long-term in the oil industry because there's so much CapEx over the last 5 or 6 years that has been cut. Hundreds of billions, if not over $1 trillion. The oil market in general is also almost a $2 trillion market when you add up the market caps of all the oil producers. And if you add in the futures contracts for oil, it's over $2 trillion. So the oil market is a massive market. Other than healthcare and oil energy are the two largest industries technically. You have the banking industry, and a lot of the stuff is in derivatives and off the books. I'm talking the real industries that actually, people use on an everyday basis, because a lot of the financial industry people don't use on an everyday basis. It's a bunch of assholes trading paper back and forth. Oops, did I say that publicly? Okay, reading through listener questions and comments now. So I think in the short term, Greg, that oil will probably go lower unless there's news about oil inventories being reduced. We haven't seen any news of major oil supply cuts yet. In fact, it's the exact opposite. We've seen the Saudis increase oil production. And it looks like Iran has increased oil production. And it looks like the U.S. is still, with a lot of Permian oil production, is still coming online. However, if the oil price stays at these levels for a couple months or a couple quarters or over 6 months, you're going to see supply start to cut back. Especially in shale, because it's higher cost. Especially in deep water, because it's higher cost. If the oil price goes lower for a while, deep water's probably, a lot of the deep water operation stuff could go bust. It's looking bad on the charts. And deep water has been in a bear market for years. It looked like Diamond Offshore in their financials had actually turned things around, and they had actually produced a small profit. They had turned their financials around, their fundamentals around, and produced a small profit at the end of 2017. And so they were turning the corner there and starting to run the business better and become profitable. But this is not helping things. Hey, Robert, that's a good point about natural gas. The problem is a lot of these utilities are very poorly run. A lot of these utilities are very, very poorly run. There's been a ton of government legislation. So they have a local monopoly, but they have tons of rules and regulations, and they're not allowed to make a lot of investments into upgrading things. It's a very slow and cumbersome process to upgrading property, plant, and equipment. So a lot of utilities in the U.S. have a local monopoly, but they can't run their business efficiently. That's the bad part about the government legislated local monopoly. I haven't researched the natural gas market a ton. I just read a couple articles this week on it, looking for investment opportunities. A lot of people just think the natural gas market went up because things were priced too low. That even natural gas producers expected lower prices. No one expected the natural gas price to rise. And that type of contrarian mindset is normally when markets bottom. So if everyone's bearish on something, that's normally when things start to turn bullish. It was going to have to rise eventually. I mean, LNG prices are way more than the U.S. natural gas price. Like, the LNG export market is very lucrative. It's a much higher price to export LNG to South America or Europe or Asia than sell like natural gas here in the U.S. The problem is it's massive capex investments, many billions of dollars to export LNG. There's a lot of things that can go wrong. It's a complicated process. Yeah, gas prices haven't dropped yet. Normally that takes a couple months. The refiners are still going to be working through stuff. It doesn't happen. The gas prices don't drop right away normally. And if you live in California, they don't drop at all. Luminary wins, $18 oil coming. That would bankrupt most of OPEC. Even the Saudis. The Saudis wouldn't be able to afford their social programs. That would probably cause a total political revolution in Saudi Arabia. They would blow through most of their trade reserves and their surplus and their sovereign wealth fund to try to delay a political revolution. $18 oil would potentially crash the global economy. It would bankrupt a lot of producers. Venezuela oil production would probably be at zero. I don't think we'll see $18. If we see 30, there's trouble. If we see below 30 temporarily, if I was a hedge fund, this is not financial advice, that would be the time to maybe go long a futures contract below 30, if it does get there. China, at some point, China could step in. They did this during 2008, and when the oil price got, I think, to around 30, like $34, give or take, China bought a ton of oil offtake agreements from Brazil and Russia at way above spot, and they were heavily criticized for it. Like, China, you're stupid morons. Why would you buy a 20 or 30 year supply contract at way above the oil spot price when you could just buy some at the spot price? And, now they're looking pretty smart for doing that, for securing supply long term. China and Russia also have Venezuela by the balls. They most of Venezuelan oil production is already spoken for. So the little oil that Venezuela is still producing, China and Russia have claims on it. I feel really bad for most of the Venezuelan people. Except for the ones that are socialists and fully supported Chavez and Maduro. Oh, one more thing I wanted to talk about. Okay, so people are wondering like what the global economy, what the central banks are going to do, what the governments are going to do. This is a great quote. Ludwig von Mises is one of the best economists ever. Okay, let's see here. On a Mises.org article, is further intervention a cure for prior intervention? All varieties of government interference with the market phenomena not only fail to achieve the ends aimed at by their authors and supporters, but bring about a state of affairs which, from the point of view of the authors and advocates' valuations, is less desirable than the previous state of affairs which they were designed to alter. If one wants to correct their manifest unsuitableness and preposterousness by supplementing the first acts of intervention with more and more of such acts, one must go farther and farther until the market economy has been entirely destroyed and socialism has been substituted for it. Ludwig von Mises wrote this in Human Action, page 854. And this, ladies and gentlemen, is exactly what is coming. So basically, if I could summarize, Ludwig von Mises used a lot of fancy words. Basically, once the intervention starts, and we've had more and more intervention over the years, 2008, the rules changed completely after Lehman Brothers, that once that level of intervention started, we're going to see more and more intervention. It's the new normal. Until we see governments, until we see the market say, hey, governments, hey, central banks, you can't do this anymore. We want companies to go bankrupt. Which, we have a lot of people asking for bailouts. Some libertarian friends of mine are saying asking me if GE is going to get bailed out. And I'm telling them the political backlash right now, I don't think a lot of people want those types of bailouts. I don't think every company is going to get bailed out. Now, the banks will probably get bailed out, but I don't think every single large company that goes bust is going to get bailed out. Do you think the government's going to bail out Campbell Soup if they go bust? Yes, there are many cracks. We haven't had large-scale bankruptcy yet, but, GE is going to be a warning signal. We're going to look back, I think, 5 or 10 years from now, and we're seeing articles come out saying GE is the exception. Our large American corporations are strong right now. They have record earnings. I'm seeing articles like that in the mainstream financial media, and, 5 or 10 years from now, you're going to look back and laugh. That people like Jeff Gundlach and Michael Milken and others that were warning people and people were ignoring them. There was a good quote here. Let me see if I could pull it up. It's in the Wall Street. I found it yesterday. Go to the Wall Street for Main Street Facebook group real quick. Okay, so GE is a harbinger for what's going to happen when large capital structures get downgraded, said Josh Lohmeyer, head of U.S. investment-grade credit at Aviva Investors, which manages more than $480 billion. So I basically agree with what he said. I think GE is going to be the first of many, but it's not going to happen right away in the next year or two. It's going to be because a lot of these companies have so much assets and capital and cash flow that they have to get to a crazy amount of debt to cash flow ratio and a crazy debt to equity level before the market just says enough. And GE could still have been doing this if their cash flows wouldn't have fallen. They would have gotten away with this for even longer if their cash flows wouldn't have fallen. Luminary wins. Apple is junk technology. Apple, $15 a share is coming. If Apple keeps up the financial engineering with issuing bonds and, they're not going to be transparent with their shareholders, their stock's going to crash a lot. Now, I don't know about $15, but they charge a really high price for a lot of their stuff, especially their laptops, their MacBooks. Their iPhones now are getting insanely high. But I don't know if they have junk technology, but they just don't innovate compared to a lot of other companies. They tend to prefer not to be the main pioneer of innovation. I mean, their main innovation in the iPhone lately has been those virtual reality, the facial recognition login. Meanwhile, like Samsung and some of the other South Korean smartphone makers are kicking their butts with the innovation. Okay, well, the home builders already crashed to RR. The home builders in the United States, Dave Kranzler was calling this for a while. They crashed more than 20%. They're in a bear market. Home builders, the home prices in Australia are crashing. I think now I'm starting to see projections that investment banks in Australia are actually, and regular banks are actually predicting a 30% further crash. Housing prices in Canada and Toronto and Vancouver will probably start to crack. Yeah, semiconductors are cracking too. Not all retail is cracking yet. So Lululemon and Canadian Goose and some of the other high flyers are still doing well. Not all retail is cracking yet. Some. The mall REITs will do bad. Some of the retail will do bad. You have to go in there and look at which ones have the worst balance sheets and stuff like that. Same store. With restaurants and retail, a lot of stuff is like average for restaurants, it's like average check size or same store sales numbers. But, these restaurants they figured out kind of ways to goose these numbers now, at least somewhat. Nicholas, the Ponzi scheme in Silicon Valley is that the early venture capital investors fleece the later ones. That sounds about right. Our Silicon Valley is done. No, tech is not done in the U.S. There's a pro-tech bias now, and tech gets higher valuations. And you do have these Silicon Valley hypocrites that have made a lot of money there, and they're moving to Texas now or Nevada. But I don't think tech is done. It'll come back. It may crash a lot. GE looks like Deutsche Bank. No, GE used to produce real stuff. I mean, they just started doing financial engineering. GE used to produce a lot of real stuff. Less than 2 years now for when the next financial crisis comes. The most likely economic landmines, the highest probability, are European governments, European banks, emerging markets, and corporate bonds. China does look bad, but I think they're going to print, and I think most people are not going to be too worried about them yet. I think they announced a new stimulus plan, and they're going to print more. So I think the most, on a probability basis, the ones I said first. And the crisis will start there, and then it will come back to the U.S. But you're already starting to see the multinational corporations that rely on global sales, that their global numbers are down. So their sales out of the U.S. are not as good. Okay, got a bunch of natural gas and oil and energy and natural gas stock questions. There's just too many here for right now. Chesapeake Energy was a disaster, Jordan. Just my opinion. The Aubrey McClendon guy, he died under really weird circumstances. Really, really weird. And their finance and stuff. There was definitely accounting fraud there in Chesapeake. And I don't know if they paid fines or not, but there was immense problems. They do have some quality assets, but their valuation was way too high initially. I haven't looked at Chesapeake. I haven't looked through the annual report and the quarterly report in a long time, so I can't give a good opinion on that stock right now. Sorry. If I do look through the financials and tell you, then I will give you an opinion in the future. So we're way over an hour. I think I've talked about most of the things I wanted to talk about. Just want to thank you guys for watching the show. Thumbs up. If you like the show, think about becoming a Patreon account contributor. And if you're an American, everyone have a nice Thanksgiving weekend. I will have probably one interview guest, but probably not going to be an American because everyone's too busy with Thanksgiving week stuff. It'll be a surprise. I won't name it yet until the interview comes out. Okay, bye guys for now.